Hey everyone, time for something different this week. And there's a set of indicators I've been using. If you've been following me, you saw them on the screenshots I posted. And that is the Saty stack. This is the guy who makes them available for free. You can find him on Blue Sky, on Twitter, on YouTube. I'll post some links in the video description. And there are four indicators. You can find them in TradingView if you search for Saty. Phase oscillator, pivot ribbon, volume stack, and ATR levels. Don't really use the volume stack. It's more like an estimate of how much buying and selling is in a specific volume bar. It's not perfectly accurate, but more or less an indicator. Don't really use it. Like I said, feel free to play around with it. The ones I do use are pivot ribbon and phase oscillator, and I'll explain how how to use them in a more condensed way. He has various videos on how to use them and explains how they were created. But in essence, this is like a better version of RSI. It's basically a combination of Bollinger Bands, uh, Cantor Channel, MACD, and RSI basically. And the way it works, I'll turn this off briefly and I'll turn on Bollinger Bands for the explanation, is Bollinger Bands goes through contraction and expansion cycles, basically. And this is color coded to match that. Green means bullish expansion, purple means contraction, and red means bearish expansion. And basically, as with Bollinger Bands, when after an expansion phase, usually after a while you will get a contraction phase, and after a contraction phase you will get an expansion phase. So how you should be using it, this is a very good example, is when this turns purple, we also have this underlying line here at the 50% level or at the zero level, is uh, Bollinger Bands are going into contraction. And when Bollinger Bands are going into contraction, eventually they will expand. We don't know which direction they will go, but based on other factors and other contexts we see, we can evaluate this and say a move is about to happen. So when we get purple here, we know that we're going into contraction, and eventually sometimes it's faster, sometimes it's slower. Like for example, this was a very fast one and we had expansion up very quick. This was a long one. It took a while for this to contract sufficiently and then expand again. We know to expect a move. A very good setup based on this was MongoDB, which I posted recently, is we had this very nice contraction here, a bit going a bit of sideways, and now we're seeing that it's preparing to expand up. And this was the expectation. So I think someone asked about it around here. Expected to go a bit sideways here, like in this area, and eventually bullish bias, obviously. Expected it to expand and go higher, and this is kind of what is happening right now. We'll see if it sticks. So this is the color coding part. Then the other part, as you can see, this is, oh, let me double click it. This goes from 0 to minus 100 to plus 100. Obviously goes even higher. This is basically ATR level based on a Fibonacci grid, meaning this is 23 point something, this is 61 point something, the Fibonacci levels, and this is 100%, as standard deviation relative to the baseline. So this would mean the stock is at fair relative value, let's say, when it's at zero. It's doing nothing, it's not expanding, it's not contracting, so it's sitting at equilibrium. When it goes up, and depending on how high it goes, it's either very bullish or not bullish. So this means 100% standard deviation move, or minus 100% bearish move. This went even lower. I think this was the, oh, this is MongoDB. Let's go back to QQQ. So this is one standard deviation, and basically this is where we bottom out. On the index level, it doesn't really go often above this level, both up and down, and it's an event when it does. So uh, this is between 61 and 100 is the accumulation area. This is the distribution area. So it will move here for a while, and then eventually it will go back to the mean. And we have, like, let's take QQQ. So not a lot of upside left, and we will be contracting soon. So what will happen with Bollinger Band is probably something like this. My mouse is messed up. So let's say something like this, and oops, I wanted to keep that one like this. And price maybe does something like this. So we don't break down quite yet, and eventually we will get expansion. I'm drawing this because the Bollinger Bands will expand regardless of direction, in both directions. So this is the expected move, let's say. So we either go up and we expand it higher, or we go down and we expand it lower. So this is kind of how you read, and I would expect this to go around here. We turn purple in this area, and eventually we either go down or we break down and do this. So this is kind of how you use it. The dots here are just some signals, like the orange one here is coming out of over 100, and the red one is coming out of distribution, so out of this range from plus 61 to 100. And the same thing at the lows, like the coming out of distribution and coming out of mega oversold. So they don't really mean that much, just telling you what they mean. And I changed the colors on my end. They have different colors on the default version. I won't get into that. So this is the phase oscillator. Next, I'll turn Bollinger Bands off because that was the one. Then is the pivot ribbon. And the pivot ribbon is a combination of various moving averages, also Fibonacci levels like 8, 21, 34. These are Fibonacci levels, various EMAs, and so on. And how to use this one is basically it will show you the trend. And when price is trending, usually it's going to bounce on the ribbon. Sometimes a very fast bounce, sometimes a very slow bounce. And another way to use it is the crossover. Like, for example, I made this prediction here for Qs, like going a bit down sideways, and we will get a contracting Bollinger Band. Uh, and we will get the ribbon. Now, price, the ribbon will shrink. Let me try to draw. I'll delete these things. Let me try to draw this. So this will shrink as price goes lower. And eventually, let's say the price goes lower and starts turning the ribbon into resistance. Like we see here that it's bouncing on the, I think this is the 5 EMA or something like this, or the 8 EMA, the white line. So this is very bullish in general. Or when something similar to what happened here, we crossed over, and then we started bouncing on this white line, which is the ATMA. And then we bounced on the ATMA again, then we went up, we bounced on the ATMA again, another bounce on the ATMA. So this is very, very bullish. Sometimes we went a bit lower, but still bounced very quickly. And we've been bouncing on this line ever since. Now, if this were to change, the bearish scenario would be hinted at we're going to contraction here. and then we start turning the ATMA into resistance. Like this will be the bearish scenario. It won't happen immediately, like I said, but it will take a while. And we have this EMA which will be going like this, and we see that we turn it into a resistance. And eventually we will lose this line, and when we lose this line, we flush. And this is an exaggeration, we won't go that down low most likely, but just as an idea of how to use this one. The bullish scenario would be something like we get to this point maybe, we get into contraction of the Bollinger Bands, and instead of going up we go instead of going down we go up. So price still goes down a bit, but we turned this area here into support, and eventually we go higher. So something like this. But if you're looking, one of the things I have trouble with, or I've had trouble with for a long time, is getting in once a thing starts moving. Like I catch the initial move, let's say, and then I take some profit or I sell completely, but I don't get back in when we do the pullback, or I don't get back in here. Like I think, oh my God, it's gone already. No point in going back in because it's already too high, and I miss the rest of the move, something like this. So this will give you more conviction about when to go back in for after a move. Like for example, this was a very nice one. Pull back here, went up. This is how it would look. The bullish version. This is how it would look. Oops, right now. Like instead of bouncing on the ATMA, we bounced on the 21. That's the 21, I think. Uh, so this is what it would look like here as well. And the bearish version would be something like this. We were bouncing here, and now look, we turn it into resistance and turn it into resistance, and eventually this this constant rejection at the ATMA is a sign to maybe go short. And this wasn't a huge move, like 4.43% on the index level is pretty good. So this wasn't a huge move, like we didn't break down or crash or anything like that, but still this constant rejection at the cloud and the crossover is a negative catalyst. And what you could do in this kind of situation, the same way when you see a trending market that goes higher and higher and higher, and we're still at the beginning of it, like you can take a long here, or you can take a long here, or you can take a long here, and so on and so on. But the same way when you see this all of a sudden a market that continued going up and up and up starts getting rejected here and here and here and so on, you could potentially take a short-term put play and just like a week out or 2 weeks out, something like this, and you can potentially catch something like this. Or even intraday, like let's say we are here, this candle at one point was here, and you look at the daily to see if it looks like we're getting rejected, and you can do like an intraday play, 0 DTE, and take this move here. The same way at for the bullish one, like you see that we're in the cloud, we're trending market, looks like we're going up, we go up and up and up and so on. So this is the pivot ribbon, combination of moving averages. Combined with this, it's a very powerful tool. The last one, and get ready to be scared a bit because a lot of lines will appear, is ATR levels. And this is ATR levels based on a Fibonacci grid. This is the starting point. This is the point 38. This is 50, 61, and 100% ATR. So this is 100%. Based on colors. This is 200% and 300% here. And this is on the yearly level. And there are a couple of rules on this one. Basically, the green one is the long trigger. Like we open here. Once we get above this level, you can go long. Once we go below this level, we can go short. Obviously, it doesn't work 100% of the time, just as an idea. Then again, this is the yearly. Uh, and how you change this is from settings. This is long term, so this is the yearly levels. Position is the quarterly levels because the quarter basically just started. It doesn't have a lot of it, and we are tagging the long trigger for the quarter. If this triggers, we should be seeing like 575 maybe. I don't know. But yeah, 575 most likely we will see. Then we have, oops, swing is monthly. Like to see the monthly levels, and you can see that we trigger long on the monthly, and we should be seeing 577 eventually maybe. Then multi-day is weekly. Week just ended, and day is daily. I'll I'll go back to days for basically day trading. There are a couple of rules with this one. One is the golden gate. Oh, actually, that's the only rule for this one. The other one is for the pivot ribbon. So the golden gate is that if we tag this level, sorry, so this is 23, this is 38. If this level is tagged within the time frame of this ATR sequence, in this case yearly, there is a very high chance that the next level will be tagged. This is 61%. And even in this scenario where we actually went and corrected, we eventually reached this. It's incredible to me. Uh, in this case, on the downside, if this is tagged, very high chance that this is tagged. And let's look at the, oops, let's look at an intraday. So this is 38, this is 61 Fibonacci. So if 38 is touched, there is a very likely chance, even if we pull back, that we will touch the 61%. And how you can use it is like um, a pullback to, let's say, the entry point. So this was the trigger to enter short, let's say. And let's assume that we do not go all the way to the 61. And we do this, then we pull back, and then the expectation is that it will do this. So this would be an entry. Same way on the upside, like this is a very extreme scenario, obviously. Let me look at the previous one. Yeah, this is a very good one. So this was the long entry. We touched the 38, went even a bit higher, but then we pull back here. And this is a good entry for this move here. We don't care about what happens next, but basically the golden gate is if the 68 is touched, there is a very high chance, like 80% plus, of tagging this one here. And a pullback from the 38 back to the entry point, which this area will behave as support moving forward very likely, or even if it pulls back here, like this is still a good entry to go for this move here. And the other rule is actually for the pivot ribbon. He calls it the Vomi setup. The logic being that this looks like a dolphin, the pivot ribbon. And eventually the pivot ribbon will flatten out as the price corrects. And we have this bottlenose dolphin look here. And the setup is that once uh, this looks like a dolphin, I mean, we have the mouth of the dolphin created. Come on, click. Once we have the mouth of the dolphin created, so this is our dolphin. If price goes below the purple line, which is the 34, I think, then it will puke. And in this case, it did with a 3% candle. Then this area became resistance, the ribbon became resistance, and we had another puke. This is the Vomi setup, and the same way it applies to on the other way around as well. Like this is still a Vomi setup here. Like we puked to the upside. This is an upside down dolphin. with the fin and everything, whatever. You get the idea. So, like I said, I'll post the videos to his explanations on this video and the links to the videos. And hopefully my explanation is a bit more fast and covers everything of how to use them. You have to use them for a while to get some experience, but hopefully they help. Have a good one. Bye bye.